Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities continue their positive momentum, supported by strong economic data from the US as key gauges of personal incomes, expenditure and inflation indicated stability in the economy. After an initial drag from earnings disappointment by tech major, most equity indices rebounded on Friday to post weekly gains, with the S&P 500, Dow Jones and Nasdaq Composite rising around 0.5% to 2%. Asian equities trended mixed for the week, with markets such as Malaysia and Hong Kong rising 2 to 3%, while Philippines and Korean equities fell between 1 to 2%, while China and Taiwan stayed flat. Data showed that China's industrial profits fell in July, while the on-budget fiscal revenue growth remained soft. Back home, Indian equities gained for the third consecutive week. The Nifty index rose 1.7% over the past week, supported by positive global sentiments and improving foreign investor inflows into domestic equities. Broader markets underperformed Nifty this week, with the Nifty Mid-Cap and the Nifty Small-Cap Index both up 1.2% each. Among sectors, IT, realty and pharma led the winners with gains of over 3% during the week, while FMCG was the only sector to end in red over the past week. The Indian fixed income market had a stable week. Government bond yields remained unchanged across the yield curve as investors awaited the domestic GDP growth data, while US bond yields continued to edge higher amid a flurry of positive economic data. The 10-year Indian government bond yield closed flat for the week at 6.86%. The 3-year government bond yield stayed flat, while the 5-year government bond yield fell 1 basis points during the past week. The INR closed flat against the USD over the past week to close at 83.9 per dollar, as improving foreign investor inflows into domestic equities balanced higher US bond yields and stronger US dollar. INR gold rose 0.6%, while Brent crude oil fell on Friday to settle at 78.8 per barrel, largely unchanged for the week, as investors weighed the expectation of a rise in OPEC Plus supply starting in October, alongside easing hopes of a sizable US Fed rate cut beginning next month. Data showed strong consumer spending in the US. Coming to macro updates for the week, there wasn't much except India's GDP growth data, which showed that real GDP growth moderated to 6.7% year-on-year in the first quarter of fiscal 25 from 7.8% year-on-year growth recorded in the previous quarter. This reading was below Bloomberg expectations of a 6.8% growth and also RBI's projection of a downwardly revised 7.1% growth. Nominal GDP grew at 9.7% year-on-year versus 9.9% growth recorded in the previous quarter. On the expenditure side, private consumption expenditure growth rebounded sharply to 7.4% year-on-year versus a 4% growth recorded in the previous quarter. Fixed investment growth came in higher at 7.5% year-on-year compared to 6.5% growth recorded in the previous quarter. This improvement was reported despite a contraction in the central government capex, which fell by 35% year-on-year in the first quarter, and also listed manufacturing and construction companies reported muted sales growth of just 4% during the quarter. Net exports provided a boost to real GDP growth during the quarter, as exports grew at 8.7% year-on-year, while imports grew at 4.4% year-on-year. On the other hand, valuables contracted sharply by 11.4%, while government expenditure dragged owing to muted spending by central government in the election quarter. On the production side, real gross value added grew at 6.8% year-on-year compared to 6.3% year-on-year in the previous quarter, driven by an increase in services activity, which grew 7.2% compared to 6.7% in the previous quarter. Also, agricultural production grew 2% compared to 0.6% in the previous quarter. However, manufacturing growth declined for the fourth consecutive quarter to just 7% year-on-year compared to 8.9% in the previous quarter. Within services, public administration, defense and other services increased by 9.5%, better than a 7.8% growth recorded in the previous quarter, despite central government expenditure remaining muted. Construction growth remained robust during the quarter, rising 10.5% year-on-year from 8.7% growth recorded in the previous quarter, despite a sharp contraction in nominal central government capex, which fell 35% year-on-year in the first quarter. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.